A good evening to you, our esteemed viewer. Thank you so much for watching Church of Uganda Family TV. This is Family Hour. Today is a Wednesday and we are discussing finances and wealth. Of course, there is a lot to talk about. For quite some time, we've talked about tax compliance, the various forms of taxation, and amazingly, people were testifying that they are victims of the various penalties that are being levied or subjected unto people who do not comply when it comes to IFRIS. So that really that shows that there is a very big problem and there is a very big gap. So this now calls for more and more tax awareness so that people do not fall victims of some of these things. But today we now want to talk about bookkeeping and the role of bookkeeping in tax compliance, because we have always talked about returns. Now, you might never have returns if you do not keep your records very well. Well, I do not want to preempt that discussion. We want to hear from a technical person, and this is, we've been with him for quite some time, and he has really dedicated this time. Each time we get positive feedback, we know that you are there and you are following through. Thank you so much for always following, and he's with us, Didan. It's a pleasure having you once again, and a good evening.
A good evening. Thank you for having me again.
Sure. How is Demo? What's else?
Demo, we are there. We are serving people. We are serving the nation. Okay. We are enhancing compliance. We are educating people out there.
Thank you for the tremendous work. As we're taking on last week's show, someone said, "Me, I'm a victim." They sent in a message, and I'm a victim of IFRIS and the penalty. I'm struggling with the penalties. And they were calling upon for awareness that surely, because we might never know what might happen, because when we talk about that, someone's like, how will they ever know about me? How? And until when someone comes out and says, hey, I'm feeling the weight of the penalty. So really, we want to appreciate you for coming out to really offer this free service to our viewers out there.
Thank you.
Yeah. Today, we want to look at the role of proper bookkeeping in tax compliance. But just to give it a basis, when we get into accounts now, bookkeeping as a broad term, what does it entail?
Okay. Yeah. Thank you, Mr. Mukaras, for hosting me again.
Yes.
And as you stated at the start, dedicating this time came out of experience, because as we do what we do in supporting people actually comply, the first challenge that we face is lack of records. No records in as far as financial transactions are concerned. Now, coming into this topic is because we would want to actually give people some hints. One, what is all about bookkeeping that we are talking about? Two, why is it necessary? On the side of the business itself, before even looking at URI, then we end up linking now bookkeeping to tax compliance. Now, when you talk about bookkeeping,
yes,
even when we are talking to our people, they normally think so much about accounting and all that.
Yes.
But for us, when we talk about bookkeeping, we are just looking at, can you have a record of all your financial transactions from period to period? What am I saying? Can you say on a Monday, I have bought so much from Mr. Mukaras? On the same day, I have sold items A, B, C, D at such prices. So in a day, these are my sales. You get the point?
Yes.
So it is not about the other sophisticated accounting, the complicated accounting. No. Can you have, for example, a small sheet? You can say, my purchases, I will list them here. I have bought this item from Mr. Mukaras. So that If, for example, you find this item faulty, or it has expired, you know, on this day, it's when Mr. Mukara supplied me this item. It is after 1 week. Why should it get expired? Yet I knew it would actually take the whole year. But because you have record, you can now go back and engage him. You're like, the items you supplied are actually faulty. So, to keep this relationship, for me not to make a loss, take back your items and give me better products. That is one, just as an example.
Yes.
But also, we have had scenarios as we advise people. Someone says, right, so in a month, how much sales do you make? Now I start with now me, because I want to understand one's business.
Yes.
In a month, how much do you make? One is like, in a month, can I even tell? Sometimes when things are okay, you can make sales. Some other time, we are just here seated.
When the season is on?
Yes, ideally. So they start bringing again issues of seasons and all that. But then, as a business person, what do you base on to plan? When you talk about seasonality in business, it is very key. But it can only make sense when you have these proper records to know last year in December, because it was a peak time, I was able to sell A, B, C, D. So in this coming December, what do I need to stock? Because we have a basis.
Yes.
You know the items you bought that didn't actually sell. So those ones, why should you stock again? You get my point? Yes. But also at the end of the period, you are in business. In business, we are there to make margins, to make profits. If a business is not making profits, you can try and push on, but you can never push on for life. The business can only be sustainable as and when it is making profits. But then the question is, at what point do you tell? What do you base on to say, I'm actually making profits? I have seen scenarios where one is making, is in a business. When he wants to rent at home, he picks money from the business. He goes and pays rent. They have just kids from school, you pick fees and pay. Then at the end of the year, or at the end of the month, you see money is not there. This business is not working. I think I need to close down this business. So you imagine someone is taking a decision without a basis. Because he or she is not looking at the cash, he feels the business is not working. He's not looking at the money he picked from the business to go and pay private rent. Because this rent is not for the business.
Yes.
The one for the business is a business expense. But if you have to pick and pay your personal rent where you stay, that's not a business expense. If you buy a gomes for your wife because you want your wife to be happy, that is not a business expense. So proper bookkeeping gives you a basis to say, these are business expenses. These are non-business expenses. So if I'm to determine profitability, I base on what did I sell? So what am I selling? What's the level of my sales? Then what are my business expenses? The difference gives you a profit or a loss. Now that gives you a basis to say, I bought things of 10 million and have sold them at 15 million. My operating expenses amount to 2 million. So I'm making a profit of 3 million before even looking at the URA. Quite often we think about URA before looking at the business itself. Because the principle is that URA will come in to tax the profit. So the question is, are you making a profit or you are making a loss? So we are saying, at what point do you tell if your business is making a profit or a loss? If you cannot ascertain, tell, or come up with a figure and you say, this is the figure for my sales, then even the figure for the profit, you never comfortable to talk about it. You can never say, by the way, my business is doing well. Now, a challenge that I have seen in businesses, actually formal businesses, you find people are busy selling, buying, but at the end of the month, they don't actually prepare reports, what we call financial reports, to say, we have sold 200 million. But then the question is, if you have sold 200 million, in accounting there is what we call cost of sales. How much did you invest in these items you are selling to get 200 million? You get my point?
Yes.
Because when you get how much you have received from sales, and you subtract what we call cost of sale, your investment in what you have sold, you arrive at what we call gross profit. that before I look at my operational expenses, rent, salaries, those others, before I look at them at a gross level, is my business making sense? Because we have seen scenarios where you have a gross profit, a big gross profit, but because you have not managed your operational expenses well, the operational expenses eat into the gross profit and you end up in a loss. So if you are doing a business analysis, you look at it from different perspectives. One, at a gross level, is the business making sense? When you look at my gross profit, how big or how small is it? Is it enough to cover the operational expenses? If it is enough to cover the operational expenses, then you have now what you call a profit. But if it is not enough to cover the operational expenses, then you are in a loss position. Now, before bringing in issues of taxation, that is where you need to make a decision as a business person. I've operated for all of these months, but every month I'm in a loss position. So, one, is this business still making sense for me? If yes, the question is, where do you need to touch? What do you need to change?
Where is the problem?
Is the source of the items you sell a problem that you buy expensively? Because you have seen scenarios where you got the same supplier, you are sold at 1,000, another one is sold at 800, and you are in the same market.
And there is one who sells at 1,200.
That is it. So the question is, where is the problem in my business? If you are still convinced, quite often we put emotions in businesses. When you have to make business decisions that actually make sense, then we must have emotions out. What am I saying? That if you are using figures to analyze, the question is, am I making a profit or am I making a loss? Possibly I'm making a loss. Then you're asking yourself, where does my loss come from? Or what leads me to making a loss? Now start from, for example, where you buy from. Because if you buy expensively and you cannot put enough margin, then gross-wise, you have a loss before even looking at operating expenses. If you find that actually you are buying at a good price, then you are making a gross profit, but you are making a loss at the end of it all. First, analyze your expenses. Like, am I in a place that is charging me rent that is high? Am I having too many workers? What is consuming our money that we are making in this business? But the point I'm trying to make is that you can arrive at this kind of a discussion as long as you have maintained your records, as long as your bookkeeping is handled smartly. Short of that, one, you never tell how much you have sold. You never tell how much you have bought. You never tell how much has been stolen from your business. Because as you say, you are not alone. There are people who help you carry. Whenever I visit downtown here, our brothers and friends, you realize there are some people carrying the boxes from the store. No one is monitoring. They are loading here, no one is monitoring.
They just sell them, can't bring 7 boxes.
Exactly. So one goes to pick 7, but he picks 10. He reports 7, but 3 have actually not reached. But now, if you have proper records, you know in the store I had 20. I have sent Adrian to pick 7, so I expect to have 13. So at the end of the day, I go in my store. I'm like, okay, do I have the 13? If I find I have 10, then you must account for the 3 that are missing. That is only possible when records are properly maintained. And that is where we go wrong, especially the informal businesses. We mind about guarding the coin. I've seen scenarios where, because I'm in a business, I get my wife sits on the safe. She receives the money, every money she receives. That one is okay. Possibly you are trying to put some safeguard. But ask yourself, the day your wife is not there, what happens? Will you close? Will you sit there yourself? Is it sustainable? Because she will wake up, she's sick. Or her kid is sick and she has to attend to the kid. How will the shop operate? It means high chances are it's you who will sit there. Then what about the roles you have been handling? Because quite often as men, we are running here and there, trying to arrange and
you actually don't have that time.
Exactly. So the question is, if the wife is not there, what happens? But the moment you have, ideally, when you do your bookkeeping very well, you find that your internal controls are improving because you know who handles what, who takes what, who accounts for what. That's what we call the internal controls. Now, the moment they are strong, you can actually be able to tell your guys, you go and open, and you come in and stay. Because you know your stocks, you can count them, you know. Since I'm not there, Mr. Mukaros will be the boss, will be the supervisor of the whole team. He will be able to see, you take this, and their records. He has taken 5, some has taken 10. So if I come, I'm like, so what have you sold so far? These cartons I can count, I multiply by the price, and I get the figure. So that gives me a chance to also live some life. Why should the shop open? Because I'm there.
Actually, what I'm saying is that when you go downtown, you realize that very many businesses have invested much into installing CCTV cameras as a way of protecting and safeguarding. But I realize that bookkeeping is even more is more important.
I will give you an example with CCTV cameras. One of my clients, we had issues, so we say let's do some audit using CCTV cameras. So we put someone to actually view what took place. By the time one spends 2 hours, this person is dozing and the footage is actually moving. So these cameras is just one way of intimidating, and of course they are used, of course, when there are serious issues and possibly experts come, extract and view, and but using them as a system of really managing, they can't do much. Because if you have been in town, down here, running here and there, who is monitoring who has done what on a camera? No. Even in these supermarkets now, uptown, cameras are there. But do we have someone who is monitoring each and every customer in the No. There
are very many screens that someone has to look at all the time.
Yes, and as human beings, we have capacity.
Yes.
That you try, maybe morning hours, you are alert. Along the way, someone calls you. There is this WhatsApp and TikTok. You are viewing, again you are WhatsApping, you are laughing on TikTok. By the end of the day, you find events have taken place and you have no idea. So, bookkeeping is part of internal control systems that actually can propel business growth.
Can a business owner entrust someone with bookkeeping, or to be safe, it should be you, the owner, to take up the bookkeeping, the records?
What I can say on that is that bookkeeping system is built over time. So you cannot entrust someone from outside to actually do this. I know you can outsource somehow, but even when you outsource, I have some clients, for example, where I do that. But internally, you must be able to record and send it to me. Because if I'm to come and do the writing myself, it means I'm your staff. When in actual sense, I'm your advisor. So me, you can write, send me, I organize. That's the bit that professionals can do. But internally, there must be a mechanism of recording each and every transaction. So it must be built within the business itself. But even so, people must appreciate why these things are done, so that people are given roles. For example, as purchases are coming in, a different person is receiving and recording. As sales are being made, another person is also responsible for that. Now, we call it in accounting and auditing, we call it segregation of duties. If one has received the items, he shouldn't be the one again selling. Because he can, in receiving, he can add in his cartons. Even in selling, he sells his cartons inside your business. So, with segregation of duties, which is very, very important, that one who receives is not the one responsible for selling.
Can these people connive?
Of course, you have a process that there are more steps and there are checks and controls. Who does what? Then at one point, who will come in? Now, that's how a function of internal audit comes in. That even at a basic level, do you have a third eye? If Mukaras is responsible for purchasing, Didan is responsible for selling, another one is responsible for banking, then the question is, who checks the correctness of whatever they are doing? Yes, now that calls in for that function of internal audit. or sometimes external. That as you do all of this, at the end of the month or at the end of the year, do you have someone external who will come and go through all of these transactions and tell you there is a problem here, there is a problem here. If you don't do ABCD, your business will actually close. Yes. Now, having said that,
yes,
the basis of taxation is records. You can never get taxation right when your bookkeeping are in a mess. I want to emphasize that.
yes,
That you can never pay the right taxes when you have not maintained proper books of accounts. Because it is these figures that will give a taxman a basis of saying you are paying so much or this much. Even when you have made a loss, URA normally comes in to say, can you indeed defend, support that you have made a loss? How? I bought so much, I sold so much with records, and I spent so much. So what I spent is much higher than what I received or what I sold. That puts you in a loss position. So if you can support with evidence, documentary evidence, that you made a loss, then you are good to go. There is no tax on a loss, because in effect the tax is a cost. So government cannot now charge you another cost on another cost. So the moment you can support with enough documentary evidence that you made a loss in your business, you don't pay any tax. I remember one time I had said, when we talk about tax compliance and filing returns and declarations and all of that, we are not saying that you go and pay a tax. We are saying communicate the results from your operations as you have been transacting and all of that. What are the results? Put these results in a template called a return. Send it to URA. URA will receive it and say, hey, this taxpayer of ours made a loss. How did he make a loss? Then they will say, bring your bank statement. One of the important documents when you talk about bookkeeping. As long as URA is engaging you, the first document is a bank statement. So they would want to know in your transactions, how much did you receive through the account? How much went out through the account? Now, why they are so much interested in a bank statement, this is a third-party document where you have no control. Whereas internally, in your sales, you can try to suffocate sales and edit here and there. But remember, a bank statement is maintained by the bank. So if you receive the money through the bank, you cannot tell the bank that, no, the other 100 million first edit it out. No bank can ever accept that.
Of course.
So URA is so much interested in this because they know this is a document maintained by a third party. Now, whenever we receive what we call tax assessments, in one way or the other, if you have failed and URA has raised an assessment, one of the remedies is going through an objection process. In an objection process, you are telling URA that your assessment is not right. I don't agree with these figures because of the following reasons. These reasons can only be supported by the documentary evidence. These documents we are talking about are a result of proper bookkeeping. Now, without proper bookkeeping, you won't have these documents. So you can never sustainably defend your argument that actually URA is wrong. And quite often, we have gone there and we have beaten URA hands down as long as we have documents as tax agents, as tax practitioners. If you call me that you have an assessment, I'm sure many of our people there, they are struggling with tax assessments even now and then.
Yeah.
Some of them receive these assessments because they don't know what to do.
Yes.
But when you have received these, what do? You have to go through an objection process. The other option is that you can pay if you are comfortable with what URA is saying. But quite often, these assessments are actually higher. Now that calls for proper documents to actually go and say, yes, I didn't do my part. I accept. But even then, the assessments you are raising are much higher than the situation that I have in my business. This is the situation that I have. Now, whenever we are lodging in what you call an objection, we put a real return. You are like, according to me, it would have been like this. This is my situation, but not the assessment you are giving me. So URI is waiting. If this taxpayer A is saying this is the situation in his or her business, can you support your argument? Show, these are my sales. What shows? Maybe you have receipt books where you sell from. Maybe if you are issuing invoices, you know, if you are paying you through the bank, you already have a bank statement. If you are saying that you bought, now the other issues of IFRS, for example, come. If the people you bought from are VAT registered, all of this you should be having IFRS invoices. Yes, if there are people who should have issued IFRS and they didn't actually issue, then you don't need to claim. You get the point?
Yes.
So, I'm just trying to say that whatever URL does rotates around bookkeeping.
Well, let's take a short commercial break. When we return, we are going to continue with the role of bookkeeping in tax compliance. Please stay with us as we come back.